guys, welcome to the first edition of my free bias videos. This is in plain sight. You could just call me Matt, or whatever you want to do. So yeah, let's see how this goes. Sorry if you hear background noise. That's because my computer is loud. Alright, so as always, trading involves risk, blah blah blah. None of this is financial advice and is for your demo accounts only. You know the drill. So alright, cool. So also just want to make sure I credit ICT. That is my number one source of learning, although I've certainly picked some things up from other places, but he gets like 99% of the credit for anything I know. So let's start with the dollar. Something I just want to mention is that ICT has done commentary for the majors already. I'm not sure how I want to do this. If I want to I don't really think I want to comment on the things he's commenting on, just because I don't want it to be seen as me taking his ideas. And then if there's, if I disagree with his bias, then there's also that. So for this first one, I already was planning to do this, and then he posted his, so I'm still gonna just comment on the majors. But what I'll try to do is I'll try to talk about markets that he doesn't usually cover, whatever that looks like. And but just want to do this one as the first edition. So here we're looking at dollar. Dollar on the daily here looks bearish. It is in the middle of, it's basically current range from daily high, daily lows, swing highs and swing lows. As you can see here, we had this consolidation range, a few deviations from it. We came back down inside and rejected the high. And then, if you zoom in on the 4 hour, it's even cleaner just to see the respect of these levels. And so, if you're asking how did I get this range, it's just a thing that comes with experience. And testing it on the charts, finding what is a true consolidation or a true range, and then what is a deviation from that existing range. Every time it comes out of this, it's essentially a deviation. And now, for those of you that know Trader SZ, I believe I don't really follow him, but I used to way back. I believe he does something like this, and only kind of realized, once I started seeing it myself, I was like, oh, I think that's what he was doing, but I'm really not sure. He does something like this. You can check him out if you want, but either way, this is what I use for consolidations, and just stop rambling. But all right, so as you can see, accumulation, whatever you call it, manipulation, and then now we're distributing. So, this was all very clean and bearish to me. As soon as we got back down inside of here, it was all very clean price action. And then now we've had sort of a deeper retracement higher into, what this is, into a fair value gap. And so we're kind of between the ranges. Essentially that, it's not 100%. I would still tend to lean on the larger swing for direction, plus, draws on liquidity. There's some open spots down here. And, plus we basically just rejected this range again. So I do think it's bearish. It's not super clean bearish, but it's sort of like slightly bearish. And then really, if it decides to go higher, dollar decides that, it wants to turn this into maybe a market maker model, which it could. You basically just don't want to see it coming any lower. I would want to make sure that this fair value area is left open. Anything under this range EQ would need to be essentially a stop run. I would not want to lose this level. And then, yeah, but there's liquidity on either side. If it hadn't retraced so deep, it would look a little better for the bulls. That being said, this was, okay, this was the news event last week. So yeah, I mean, usually these high impact like FOMC, NFP type major news events see this kind of fake drive higher, then the next day it goes the true direction. So I'm leaning on bearish, but it's not as easy as it was over here. And yeah, so moving into euro, we can see this is the same range that exists on the dollar, right? But just basically inverted. Again, deviation from that, and now it's looking pretty good for the bulls. I wouldn't, we've already tapped into this area twice, right? I don't think we should tap this low again. If we do get down here, I would look for it to essentially start to respect this range again and then go lower. But I personally don't think that's going to happen at the moment, at least. The easiest draw on liquidity right now is essentially last week's high. Just watch that. I mean, that seems like a first easy target. There's this area, this imbalance here, inside of this order block. So that's, that could be next. And then if it starts looking strong, then we essentially have equal highs up here. Yeah, let's see. This is the 4-hour chart for euro. Yeah, so like I said, these equal highs look pretty nice. But, that's a little farther out. We need to see how it wants to handle last week's high. If it, taps it and rejects it, depending on the day of the week, that will be a big determining factor. But if we see it just kind of moving through strongly without rejecting, then I think this could be next. So that could be a nice long setup. You can see a fractal of the range here. So yeah, essentially this is a smaller consolidation, right? It's the same consolidation, but it's just a smaller version of it. A deviation here. So we're looking at the blue line. Sorry, it's a little confusing. I should have maybe made 2 slides for this, but either way. Comes back inside, starts respecting the levels again, and then we had that manipulation drive lower. If you'll notice, that was about halfway through the month. June. Between May and June. And so then that sort of became our power of 3 for the month. So that was really nice, if you were able to catch that. And then made that drive lower, comes back inside the range, and then we start exploding higher. So yeah, this was a consolidation. So I mean, this looks cleaner to go higher than dollar, and that's fine. I'm being a little more conservative on dollar, but euro looks a little stronger. Sorry for the spamming. And now you also see this old weekly low. I don't think I marked it. Yeah, I didn't do the weekly chart, but this is also acting as support, so that's nice at the moment. All right. Yeah, you can read these annotations yourself. Pound looks a little ugly. It's yeah, I actually don't know what's gonna go on here. I mean, I essentially just have a line in the sand. This is what? A low resistance liquidity run, right? So if we start seeing strength, maybe throughout the week intraday, that will be an easy target. But it's going to depend. I don't like how, it could run out these lows first. It could even come come down inside of here and fill in this gap. I would definitely watch this level, but I don't want to see this being lost and then maybe price sort of starting to respect this again, which can definitely happen. I'd rather see support at that line in the sand. Yep. All right, so I wanted to. So those are all the markets that ICT has already covered. Again, I made these slides before he posted anything, and you know, I won't say on here what his stuff said, but anyway, so then I threw in a couple of other markets. Looking at Aussie. So if dollar is going to be bearish, then Aussie's looking pretty strong. Better than euro, better than pound. Although euro does have that nice equal high target. If we see weakness in the dollar. But to me, Aussie looks pretty nice at the moment. In terms of going higher. And then if you want to, you know, whenever you're looking at Aussie, you can also look at gold. Occasionally they'll have correlation. And I think gold looks, you know, pretty good at the moment. I guess I didn't mark this out. Lazy me. Horrible. But you can see price respecting this gap here and then starting to move higher. You know, it's only, we swept these highs. So that's always a potential red flag for reversal. But it's not like a 100% thing, right? So Aussie looks strong, gold looks strong. If dollar is going to be weak and proves its weakness, then I think those markets can go higher. But I only included gold as a basically to supplement the Aussie. Now, dollar CAD also looks really nice in terms of bearishness. So again, if dollar is going to be weak, then I think dollar CAD will be nice and weak. So whenever you're, you know, trading based off the dollar, you want to make sure you're looking at all the majors and see which one is essentially, you know, you're comparing relative strength, right? And I don't want to talk too much about that, but look at all the majors, see which one, you know, has easier objectives, and that's usually the market that's better to trade. But anyways, I don't want to talk about that too much. So we are currently at a discount within this swing. So I would maybe look for price to come up a bit higher, fill in this gap a little more. Possibly it will reject the EQ of this downswing. Possibly, you know, it may not get all the way up there, but once it gets to equilibrium, then you can maybe start looking for shorts in your demo accounts. But now if dollar does, you know, decide to start being bullish, then obviously not great for bearishness in dollar CAD. I mean, it's just not going to happen. Not very likely. Yeah, so if dollar starts showing strength, we have equal highs here for dollar CAD. So that will be next on the list. But again, that's a little far away from where we are at the moment. There's some really easy downside objectives for dollar CAD. We have this old low. There's an old low over there. We have this area of imbalance. So, you know, could be better. If I was gonna go short or long, you know, depending on what the dollar's doing, if I was gonna go short the dollar, long the currencies, I would probably go short dollar CAD just because of how clean it is on the 4-hour chart at the moment. Oh, I did it out of order, but this is the daily for dollar CAD, and you can see those lows that I marked out. Not much else is shown here. And then similar to Aussie and gold, you have CAD and oil. Those two are pretty nicely correlated at times. So if oil is strong, then CAD is also can be strong. CAD itself, I'm not talking about dollar CAD. I'm saying like CAD as in the CAD futures. The currency of the Canadian dollar is strong when oil is strong. And that's because it's a major export for them. And obviously from this chart, I didn't even need to mark it out. You can see the oil is pretty strong at the moment. Now, obviously, again, it's at premium, yes, but it's trending. And this is a commodity, so, you know, they're going to trend a little nicer than perhaps currencies will. So, yeah, that's why I would say dollar CAD can go down because CAD is strong, dollar is slightly weak, and that's how it works. Oil is backing up the CAD, so that's why I think that market looks the best for shorts. Dollar CAD looks the best for shorts at the moment. Okay. What else? So this was the CAD futures, just to illustrate what I was saying. In case it was confusing, right? I'm not saying dollar CAD is strong. I'm saying that Canadian dollar futures are strong. Therefore, dollar CAD is weak because it's dollar against the CAD. All right. I'm going to confuse a bunch of people. I hope I didn't confuse you. I believe that's it. Yeah, that's the last slide. Now, you know, I'm doing this for free. I'm doing it mostly to see what's the reception and, you know, if it's helpful, if I'm even accurate enough for this to be something that I do. That's a thing. But, you know, I do all of this analysis for myself anyways. It's really not a lot of extra work, and it helps me personally to say it out loud anyways. So if it is helpful for people, then I'll keep doing it. I'll probably make a point of covering markets that ICT is not covering in his group. I don't want to be disrespectful to him at all. He's awesome and he deserves our respect. So yeah, maybe I'll do things like indices and whatever, crosses and whatnot. But I hope that was helpful, guys, and I shall talk to you next time, I guess. Bye bye.